What's going on, everyone? My name is Nicholas Merton here at Data Dash, and today is February 27th of 2020. Well, folks, I hope you are having a fantastic day wherever you are. And in today's video, we're not only going to be diving into the craziness that we've had in cryptocurrency markets over the last couple of days, but along with that as well, talk about the continued growth and fear in traditional equity markets as global equities have been selling off due to fears of COVID-19. And outside of that as well, really focusing in on not only a lot of data science and price models for Bitcoin, but along with that as well, just trying to step back and take in a sense of time frames when we're, analyzing these markets, not looking so much at the daily, but focusing on the weekly and the longer term perspective of how these assets are performing on a yearly basis. I always try to emphasize that here on the channel. Now, two quick things. We're not only got a sponsored review of Ledin.io later on in the video, but along with that as well, TaxBit's doing a giveaway where you can win one of 3 different packages for the TaxBit software. So if you guys are interested in that, fill out the form down below. It's free to enter into the contest. Just enter your information down below and enter in for a chance to get your taxes done this season. All right. So let's go ahead and let's just go ahead and dive into markets real quick. So we can obviously see still the vast majority of cryptocurrencies are likely in the red or in a no trend scenario of anything. But right now, we are seeing a good rebound in some of the big altcoin plays, like Chainlink, for example. Kyber Network coming back, making a strong rebound after, to be fair, a pretty big sell-off the other day. So, again, coming back, taking in some of those gains here. And I'd say it's probably, these plays are up more than 5 or 7%. It depends on the time frame that sometimes CoinMarketCap is pulling. And if you're using TradingView, you're going to get sometimes despairing time frames. But long story short, we'll go ahead and take a look at the charts here in a bit. I want to go first and take a look here at Bitcoin. Now, I want to make note of 2 things here, guys. And I want to make a very important point here as I probably should just go ahead and spend some time to talk about the indicator. So you guys have likely seen the SMS indicator, but I know not all of you are always tuning into every single episode. So to put it simple, the SMS indicator is an aggregate indicator that aggregates 3 of my favorite indicators: the squeeze momentum indicator, the MACD, and then also the stochastic RSI. These are 3 of my favorite indicators personally. And what it does is there's a certain point structure here to where I can put it simply. If we get over 3 points here, or we have a green cross on a weekly, this means that the trend is likely reversing to the upside, and that I likely should be reading a generally bullish tone in price. And vice versa, when we get a cross down here, this can be a bearish sign. Now, that's a very simple way to put it, right? That's basically the gist of it. If you really want to use it as kind of an indicator, like you would a normal indicator, the major point to take into mind, though, is that when we get these crosses, right, you're going to have to be subjectively choosy as to whether or not you decide to take it at first glance or if you wait for a weekly close. It's a very important thing to take into note. And if you want my opinion on it, I usually wait for the weekly close. This is something that actually Sandeep and I, who actually helped build the indicator here, he's much as a part of this indicator as I am. He made it possible and actually programmed it. He's a great guy. The thing is that Sandeep and I always kind of went back and forth about this, and it's a very important question. Sometimes it can be a front runner indicator, and it has sometimes in the past proven to be beneficial to kind of go off of the assumption of what it's giving you then. But in reality, I usually like to wait for the weekly closes here, especially in cryptocurrency markets. And what's nice is even if you did back here and you waited for the weekly close, in this case, it was still a good precursor here. You could get in the week after, right, and still be able to ride the trend, right? So again, I don't like to jump the gun here on the indicator. Sometimes you'll actually see it, usually not on these weekly time frames, but like on the shorter term time frames, you'll see it bouncing up between 2 or 3 points or 3 or 4 points at those kind of crossing points. So I think it's always good to wait for a close if you really want to use it. But using it on these longer term time frames is key above all. And right now, we're waiting to see if this is going to be closing there. Now, another thing to keep in mind as well, right? Again, you guys know long-term Bitcoin. I'm not fretting here, right? Like my target is anywhere, around $100,000 for late 2021 and early 2022. But along with that as well, another key thing to look at is Bitcoin dominance. And Bitcoin dominance has a flip here from 0 to 3 points here, as we've had not only 2 weeks here where basically the movement in altcoin markets has stagnated, but also we had a nice green week here where Bitcoin really started to regain ground as we had a pullback. But we're seeing a lot of those gains fade here quite quickly, right? Over the last few hours here, we've had an over point drop here in Bitcoin dominance. So again, I don't think this is something to be extremely fearful of. And seeing the kind of resilient rebound in some of these plays, like Kyber Network almost right back up to the range it was trading at over these last few days. We got Ren here, for example, coming back into the range here. Again, another one of our top 10 picks. Chainlink bouncing off. This is exactly what I wanted to see. When I started to notice that we saw a sell-off, the one thing I was praying that would happen would be that we'd come down and test this line of resistance and make it support. And look what the bulls did. They came in buying into that fear. And the price isn't as high as it was back a few days ago, completely fair, but it's good to see us back at that range there. And these are good projects, guys. These are the valuable plays here. Kyber Network, which is going to serve as the base, likely going to serve as the base liquidity layer for DeFi. It's building its own decentralized autonomous organization of decentralized governance. Ren as well, spawning the creation of liquidity pools that could really bring in a lot of liquidity into the DeFi ecosystem as well. And then also Chainlink as well, being able to provide oracles, being able to provide the solution to pull out out-of-world data into the blockchain, right? Or outside data, outside of the Ethereum network, into real-world systems. These are very valuable propositions here. And you can see the broader altcoin space is up. I mean, we're seeing a lot of these valuable plays that people are trying to get at a discount coming in and buying at these prices. So again, I haven't fretted, guys. I haven't traded my positions. And the major thing I want to emphasize here, even though I'm looking at the daily, is to look at the weekly time frame, right? Focus on the weekly time frame on these things. See how they've been performing over these longer term time frames. Don't get upset when they drop 5 or 10% because they just went up 15, 20, or 25% just the other week, right? Again, it's the key element that I see a lot of people mess up on when it comes to not only cryptocurrency markets, but most markets. It's all about time frames, it's all about patience, and it's all about long-term targets, right? I'm not perfect as a trader. I don't always get in at the best price. And I had some people commenting the other day. We were talking about Bitcoin. Let me see if I can get the chart up here. Yeah, and they were saying how, like, Nick, you said it was going to continuously go up to 12K. And I said, no, I still have a target, for example, of 12,000. And I'm not trying to, be argumentative, or I'm not trying to spawn an argument or anything. But my point here, guys, is that when I talk in very long-term time frames. I don't care about what Bitcoin does this week or next week. I care about so long as it's keeping in my longer-term time frames here, my longer-term patterns, right? And the fundamentals are still the same that I know are going to spawn the next cycle, then everything's all good. I know the halving's coming up. I know DeFi is continuing to bring out 3 or 5 new interesting projects every single day. I can barely keep up with it. And we can see that being reflected in Ethereum's price. I see the momentum coming in, right? I'm not going to fret that much. Now, if my SMS indicator here signals weakness, I might wait until I average into the market. Or I might wait until we come down to the support line here to make any additional positions. But my time frame is not what's going to happen here over the next 24 hours. It's what's going to happen up until 2021 and 2022. It's hard to find value out there in the world right now, guys. A lot of things are overvalued. Properties, equities, most things are overvalued. But we need to find things that can provide us some form of returns over the next few years. And that's a point that I really want to hit on here, right? If we take a look at Bitcoin markets here, this is, again, another perspective play here, right? So let's take a look at the last little rally we had here. I wouldn't say it's little, it's a pretty good rally in 2019, right? So as we started to move up here, I remember when I was in Amsterdam here, we saw what appeared to be the first initial sign that, okay, we're back in action. The accumulation period might be over. And we had this bounce up here. Now, there was really 2 major corrections here. One that was 23.78% and one that was 17.75%, right? Both of these sell-offs here, right, could have prompted people to say, oh my God, we're going right back down to the accumulation phase. But markets kept chugging forward. We went from, for example, at both of these points here, ironically enough, the corrections led to the same price range. We're at 7,000, all the way up, and basically nearly doubling towards 14,000. Well, if you would have sold in those things, you would have missed out on the continued rally. And the key thing I want to show here is a sense of perspective. This is a 19% pullback. This is common for Bitcoin. It happens all the time. And the interesting thing is, unlike those times where people were still greedy on the fear and greed index, right? The indexes were still showing Bitcoin is overbought. We have a 19% pullback, and now we're in the fear section. This means that this is irrational selling, that people are thinking short term most likely, that overall Bitcoin is not that overvalued, right? So again, I hope this provides good perspective, guys. I'm not trying to act like I know everything, right? I'm just talking about, keeping the perspective of not letting the emotions in the short term get in your focus, right? Viewing the charts every day is not healthy. Watching data dash every day, now that might help you get a little bit more mental sanity when watching all this craziness. My whole goal is to help be here for you guys and just to kind of talk about the craziness, but at the same time talk about how, as crazy as it seems, it's not that scary, right? So anyways, I want to go ahead and we'll dive through a few data science models here, and then we're going to talk about equity markets. First off here, got a really interesting chart. This is something called the Guppy, the weekly Super Guppy. This was published. This actually came from Josh Rader, who I hope I'm pronouncing his name right. So, but we both follow each other on Twitter. He's a nice guy. I like a lot of the stuff he puts out. Parky as well was the one who posted this, and he showed this chart here. It basically showcases. It appears to me, I'm trying to remember the name of the index here. I guess they call it the Guppy here. But I've seen a lot of people utilizing this. It's basically, from my understanding, a measurement of a variety of moving averages on a chart, but I might be wrong on that. Long story short, though, I like the consistency here, again, with these kind of indicators where we can see where we get the flips before the broader cycles here. We can also see it as well when it starts to flip red, but eventually when we start to get the green flip here, it's the next cycle. So we have started to enter into that. We've had a very similar correlation here where we had a small phase here where we were in the red and then eventually flipped into the green here for the next cycle. So just another interesting chart perspective. Another one as well from Plan B. You guys probably know Plan B, one of the bigger names in the data science space for cryptocurrencies. Just reminding people that for the logarithmic, not the logarithmic chart, the stock to flow model, we're right where we need to be. This is exactly where we should be. And actually, it is technically the logarithmic chart placed over the stock to flow. So again, beautiful chart here. Good reminder here that we're on pace for where we should be. Another one as well from an individual named Nick, or BTC Onometrics. I like that name. You should not trust me with pronunciations. Keep me with the price action and data science and TA. Anyways, here, this is basically this is known as the instantaneous residual likelihood analysis, and it's basically showcasing that the likelihood that Bitcoin's price is where it should be in accordance to the stock to flow model. Now, what's interesting about this is that we're getting actually a lot more consistency in the sense of where Bitcoin's price should be here. You can see over the long term, there's almost kind of a long-term uptrend since back here in the later part of 2016, where we've been building a more consistent likelihood of being confident that we should be where we should be in the sense of the stock to flow model, that we're keeping more in line with the model. And that's very exciting to see here, that the stock to flow is coming to play, because it means that when it kicks in and we get that reduction, actually the increase in the stock to flow, which means it's going to take more and more time in order to increase the supply for Bitcoin again, then in this case, we're good, right? We're very much on track here for those exponential levels of anywhere from around 80 to 100 to 120K in the next cycle, right? Again, you have to give room for those broad ranges. It really depends on the kind of FOMO that's going to come after, because we know we can exacerbate the halving and when it comes time for the cycle. Another thing as well, we talked about this chart here. I don't know if this came from Thinking. I think it did come from Thinking Crypto, but we talked about this on TradingView the other day. The golden bull run cycle, where you have basically an equivalent amount of weeks to the upside, and then you also leading up to the halving, and then an equal amount, roughly speaking, or about 49% compared to the 51% that we build up to where we have a bull run. So to make that simple, we can see we had 76 weeks here from the bottom to the halving, and then after that we had a continuation after that was relatively equitable. 53 weeks back here to 52 weeks between the bottom to the halving and the halving to the top, and it looks like we very much may be on pace to do the exact same thing. This is actually one of my new favorite charts, guys. It just keeps it in perspective, right? We've already had some great gains from 3,000 up here to 9,600, but if you're planning for the next cycle here, and this isn't accounting for the returns here in the sense of like where price is going, it's just showcasing the time frame. We've still got a few hundred days to go. If you can think about it, it's going to be over 2 years here, most likely, that we're going to have for this next cycle, or a little under 2 years if you count the remaining days we have here. Actually, I would say, because if you're doing 365 times 2, I would say, yeah, we've got a little less than 2 years. So important thing to take note. And this is, again, one of my favorite charts that Bitcoin Charts put out. And it's basically, it's a yearly price performance. So each of these candles are a year of Bitcoin's price that showcase the performance. Again, really amazing stuff here, guys. If you can factor in not only just the years, right? Just the years alone where we have positive returns here, they seem to negate the negative years that we've had, the 2 negative years in Bitcoin's price. But along with that, we have these exponential years, right? Like in 2017. And this is what you're looking for when you invest in assets like Bitcoin. This is the reason why Bitcoin should be, again, I'm not a financial advisor. I can't tell you guys what to do. But why many people would say that Bitcoin and assets like it, these kind of new emerging assets, or maybe gold and silver, should be a portion of people's portfolios, 1 or 2%. Because just having Bitcoin as 1 or 2% of your portfolio can in many cases outpace your broader exposure to larger assets like equity markets or your property. And that's the really cool thing about it. And I usually would say that for younger people, in this case, people who are aiming to invest for the long term, I think that this is a market where 5 or 10% of your portfolio will be life-changing in a lot of ways. But again, I don't want to tell you guys what to do. If you don't understand Bitcoin on a fundamental basis and why it's valuable, then don't do it. All right. So anyways, just want to go ahead and make the case here for equity markets again. Right now we're seeing global equities continue to sell off. Russian markets selling off alongside Germany at pretty stark levels, over 3% here. Russia pushing near 4% in its futures. And we can see here the Dow Jones down 1.3%, S&P 500, and the small cap here, the Russell 2000. And then I want to see where the NASDAQ is. I might have missed it. The NASDAQ selling off even worse, around 1.5%. So I want to go ahead and take a look at something, guys. And this is something that I wanted to stress here on the channel because I'm not big on wanting to time markets. But I have, set a pretty bearish position on equities, not only here on the channel, but through our newsletter, which you guys are welcome to sign up to if you'd like to get kind of my broader market analysis. But I had some people bringing up what might seem like a fair criticism. And I think at a point, to a degree, yes, it may be fair. And that was that I've been bearish on equity markets since back here in September of 2018. And of course, we've had equity markets rally pretty high here. We've actually had basically what would be the equivalent of a 17% return since then, all right, to its all-time highs. And some would say, Nick, you stop trying to time markets, stop trying to call the market. It's not worth it. And I will say more than anything, that's probably the fairest criticism. I've stepped away from trying to make those calls, guys, and being too confident in it. Again, the video the other day we did on the coronavirus sparking a recession is that it's highly likely that we're likely entering into a recession, but I'm not going to say that it's foolproof until we see 2 negative quarters of GDP, right? But I want to go ahead here and just provide some perspective to people who might be criticizing that. Well, basically, if you would have longed equities at that, or just have being held positions there, we're asking whether or not we got a return from that point on. You would have faced a 20% correction in the S&P 500 from that point on. Actually, if you really drag it up here, it's nearly around 21%, but we'll just go ahead and say 20%. So 20% decline. And then after that, it would have taken you over the course, if we actually drag this chart down here, over the course of 60 weeks to not only recover from that entry point, but to make a 17% gain, all to have 10% of those gains be lost in the matter of a week. So my point here, guys, is that when markets get exacerbated in valuations, when central banks can't respond quick enough to something that happens in the world in regards to macroeconomics or geopolitics, stuff like this can happen. And even if we were to take away this 10% decline and take in a yield of 17.8%, let's be real, guys. If we do a ratio of Bitcoin, even after it still had a 50% correction left, Bitcoin has still outpaced the S&P 500. With all of its volatility, with all the scariness, it's basically gone up nearly close to about 50% compared to the S&P 500. Even with the sell-off, and even with the crazy pullback we had this summer. And gold as well. Gold is continuously setting higher lows. If you take a look here on the ratio chart, we can see higher lows to the S&P 500, and it's looking like it's going to break out. It's going beyond our predictive model here that basically used the previous price action of the last breakout. I mean, guys, this is my point here. I mean, if you look at the ratios tell all. Gold, silver, and Bitcoin, as well as cryptocurrencies abroad, are outpacing equity markets by a long shot. They've been doing so since 2018 when we took our position against equity markets, because we realized, at least I had built the position, that it looked like equity markets had seen the greater part of their rally. I traded equities over the last few years, guys, back throughout the early part of 2000, 2012, 2013, upwards towards 2017. I loved equity markets. I had a great time trading equity markets. It was the first place I really got my grappling for trading and investing. And it was fun. And there's a lot of great diversity and interestingness about equity markets because there's so many different stocks working in so many different industries. But when it comes to being a macro trader, you have to focus on prioritizing where your value is going to be. In this case, it's gold, silver, Bitcoin, and altcoins for the next coming years. And I think we're just getting started on what's going to be a fantastic new market of digital currencies. I mean, we're talking about a market that's valued right now at about $260, $270 billion. Equity markets being a $40 trillion market in the US alone. If you talk about global equities, it's about double that. So you're talking about $80 trillion of equities, about $10 trillion in value in gold markets and silver markets, and then not to mention the vast amount of money that's sitting in deposit accounts. I think we've got a ways to go for Bitcoin. So anyways, that's it for the base core of the video, guys. Let's go ahead and jump into the sponsored review for Ledn.io. Alrighty, everyone, so let's go ahead and spend some time to take a look at today's sponsor, and it is no other than Ledn.io. Now, for those of you who are hearing about them for the first time, to put it simple, Ledn.io is a platform that allows you to do a multitude of things in relation to cryptocurrencies. They allow you to earn interest on your Bitcoin. You can get double the exposure of the Bitcoin you currently have through their B2X program. And you can also even take out a cash loan that's backed by Bitcoin. And we're actually going to be talking and emphasizing that point in this video. We're going to be going through and reviewing the process of how simple it can be on the Ledn platform to be able to take out a cash loan with your Bitcoin being backed as the collateral. All right. So first off, just to put it simple, of course, the first thing you have to deal with is signing up for an account and doing the onboarding process. And that's going to require you to do very basic KYC. This is standard with any exchange, and it's the standard process you're going to have to do if you're going to be interacting again with your bank account, in this case, and taking out a loan. Along with that as well, I highly recommend you do two-factor authentication in this case for your account. It's very, very important for security reasons. Now, if we go in here to take a look at our loans here, we can go simply and take a look at our account, but right now we actually don't have any loans. So you can either click on view account here, or you can click the borrow button in the top left that will take you to this window where we have a very simple calculator. So to put it simple and understanding how Ledn works, and just to kind of reduce the complexity that some people might think is involved in this process, which there really isn't much, to put it simple, you basically need to put aside a certain amount of Bitcoin that you own. In this case, we're doing, for example, a sample $500 loan here. Let's say I wanted to take out $500, which is the minimum amount on Ledn. I would need to, in this case, give Ledn 0.112 Bitcoin to use as collateral. So this is the amount here that I will need to send to Ledn once I get approved in order to get $500 wired to my bank account. Now, there's a few things to note here, right? There's a 50% loan to value ratio. So if we take the current market value of Bitcoin right now, it's anywhere from around 9 to 10,000. This makes perfect sense. If I want to borrow $500, I need to have double the amount in Bitcoin in the sense of dollar terms to be able to take out this cash loan. So basically about $1,000 worth of Bitcoin for $500 of cash, right? Now, this doesn't mean I'm giving up my Bitcoin. I'm basically giving it to Ledn to hold for a while to use as collateral. And I can also not only take out a loan in US dollars, but for Canadian citizens, you can take out a Canadian loan and for Canadian dollars. And along with that as well, you can also take it out in terms of DAI. So you could get it sent to a specific Ethereum address. So it's a really cool system here that allows you to get cash in the short term by not having to sell your crypto assets. Now, there's a few good pointers to take into mind here before we talk into the process here. It's very simple in the sense of the process, and we'll talk about it in a moment. But the major things that are benefits here is that on Ledn's platform, when you take out this loan, you can actually monitor where your Bitcoin is on the platform and see that it hasn't moved through their proof of reserves feature. So this basically showcases that you can have 24/7, you can actually track, unlike most lending platforms, where your Bitcoin is. And along with that, they use BitGo security, in this case an insurance that actually helps to secure not only the funds, but also along with that have an insurance policy in case something were to go wrong. And then outside of that, it's important to note as well that when it comes to Ledn, the process is extremely simple, right? So we not only have a decent interest rate here, about 1% monthly in this case, which is not bad whatsoever. But along with that as well, you can apply for a loan here. And it basically is a standard process where you have to get verified. In this case, I've selected a DAI address in this case. Now, if I decide to go back and do a bank, for example, like a USD bank transfer, I'm going to have to provide a lot of bank information. So for those of you who might be looking for something more simple, maybe a DAI loan in this case would be simple, which is basically an Ethereum-backed stablecoin. But again, you choose your loan amount, you go through and fill out the banking information, and then you have to review and submit. Now, again, I'm not going to fill this out on camera because this is my personal bank information, but to put it simple, again, guys, that's all you have to do, and then you'll go through and review and submit, make sure all your KYC information is good, make sure all of your banking information is good, and then you just simply submit the application. That's all you have to do, and in a matter of 24 hours, you'll know whether or not you got approved or not. And the reason this is so simple, and the reason why Ledn makes this process so streamlined, is because you're putting up collateral at the end of the day. They don't need to know about any credit checks, they don't need to know about your credit history. So long as you have the collateral there, in that case, it's beneficial. Now, there's two things to note here. The question here is whether or not Bitcoin's price goes up or down. So far, Bitcoin's price has been doing quite well in 2019 and in the beginning of 2020. So it's actually been very beneficial to take out a Bitcoin-backed loan because you can actually refinance and you can get actually more dollars as the value of Bitcoin goes up. But I would say to bear in mind that there are some risks with that, because if Bitcoin corrects a certain amount, in this case, if it corrects more than 50%, and in this case, you can get what's equivalent to a margin call, in this case, a reduction of your collateral in order to cover the dollar loan, in this case, if you can't pay it back. So what Ledn will actually do is they'll actually notify you ahead of time as your Bitcoin's declining to either deposit more Bitcoin or to start paying down some of that loan ahead of time. So again, it's a very streamlined platform. Again, a lot of transparency in the sense of where you're putting your Bitcoin and being able to track it. So I like the Ledn platform for that reason. And if you all are interested, check out the link down below in the description so you can test it out today, starting by taking out a minimal loan of $500 in the platform and locking in some Bitcoin collateral for that loan. But that being said, that's it for the video, guys. Thank you all so much for watching. And at the end of the day, the key thing to keep in mind is what is the interest rate I'm having to pay on my Bitcoin, and then also where's my Bitcoin being stored. I like the approach that Ledn has taken, and I recommend you guys give it a chance. All right, that's going to be it for the video. Thank you all so much for watching, and I'll see you all in the next one. Stay tuned.